Hey, very good afternoon to everyone. Welcome to today's session. Today we will be looking at price action and pivot points. And the pivot points is one of the more common indicators that we're using for our live analysis. So today we'll be going through in depth on how we can actually use the pivot points for our analysis. All right, today is the 20th of March. It's a Thursday. My name is Sherman. I have my email here. I'll leave it up on the screen at the end of the session. If you have any questions regarding today's stream, feel free to email me directly. Okay, a quick disclaimer for everyone. Trading any forms of derivatives carries significant risk. Do ensure you fully understand what you're doing before you make any trading decisions. Okay, always start off your own demo account first before moving on to your live accounts. And there's a deposit bonus. Same thing, 50% for your first deposit up to $500. Right? QR code is here. You can actually sign up anytime at your convenience. I'll leave this at the end of the session as well for you guys to sign up. All right. Otherwise, we'll be looking at the charts. Today, we'll be looking at let's look at gold, XAU-USD, as an example of how we can actually use the pivot points. If you guys have any requests for other instruments, we can do that as well. But the one that we'll be using for the base will be XAU-USD. Okay, so this tool that we're using is called TradingView. Okay, it's the same as a lot of the other charting platforms. Some of you might be familiar with MT4, MetaTrader. TradingView is one of the most common front-end tool, and you can connect directly to Vantage as well. Okay, so what we want to do, we want to add in the pivot points indicator. Okay, the one that we're using is called Wins Pivot, but if you search for pivot points, you can see that there are quite a lot of variants of both the community as well as the TradingView standard offering of how you can actually look at the pivot points. Okay, but the calculations are the same, so we're going to use the one called Wins Pivot. Okay, add that in. Okay, and I'll show you the defaults. Okay, so the key thing why we're using pivot point, okay, or the general rule of thumb is that we want to be looking at the chart at a lower time frame. Right now we're looking at the 1 hour time frame, and your pivot points will basically give us a guide at on the higher time frame. And right now we have it as the daily pivot. Okay, so same thing if you want to do it on the 4 hours. Okay, by default, this pivot point will change to the weekly, and then if you're on the daily, it will change it to the monthly. Okay, so I'll start off with the higher time frame and how we actually look at it. Again, kind of sticks us on the daily. And then the pivot points are on the monthly. Okay, so you have the average of the 3 key points that we have last month. Okay, the high, the low, and the close, and that gives us our pivot point in the middle. Okay, as the name suggests, this is where we look at if prices are above the pivot point, we are bullish. Okay, it means that buyers are willing to bid higher than the average of that 3 arbitrary points that we saw last month. If we're below the pivot point, then we are considered bearish. Okay, that is one reference point. We have R2 and S2. R represents resistance, S represents support. So by default, you have the range that we saw last month. Okay, it's 184.52. Okay, so if you compare that with from the pivot to R2, you'll probably get the same distance. Same thing from the pivot to S2, you get about 104. Now, what this means is that if the momentum from last month maintains, we will be able to get prices up to R2. And if we are in a bearish scenario, then we'll probably get the price down to S2. Okay. And by default, you will notice in an uptrend, R1 will be around last month's high. In a downtrend, S1 will be last month's low. Okay. But the distance from from the high of last month to the pivot will be the distance that we will be seeing from the pivot to S1. Okay. Right. So the distance from the high to the pivot is the same as the distance that we'll be seeing from the pivot to S1. Okay. And then the distance from the low to the pivot, okay, will be the same distance as we have it from the pivot to R1. Okay. If you want to have an in-depth look at the calculation, you can click on the curly braces at the top left-hand corner of this indicator. And it will show you from line 65 to line 75 the calculations of how you get these levels. Okay, so whenever we're bullish, we just want to look at this area here, pivot M2 as a guide. This is not a hard and fast rule, but as a guide to see, to kind of tell ourselves that this is where we will consider it as a discount, and the target would be around R2 and 4. Okay, this is for a buy setup. Okay, so this month we are looking at this whole setup here. And then if you're bearish, that the opposite is true. So M4, M3 pivot will be our entry, and then M1, S2 is the target. Okay, but because we were bullish in the XAUSD, okay, so this is sort of the setup for this month. Okay, at the start of every month, we'll be looking at the monthly pivots. So this was something that we talked about at the start of this month, and the target was 30.23, right in the middle between M4 R2. Okay, so you can see 3 consecutive months. Okay, the momentum of gold has been roughly similar, and it has been reaching the R2 and 4 for 3 months. Okay, how do we tell if it's bullish or bearish? Okay, most of the time you can see price ranging between R2 and S2. Okay, and rarely you see prices break above R2. Okay, prices breaking above R2. So whenever we see something like this happens, okay, the R2 and 4, instead of it being a resistance, it will become a flip zone to be our near-term support. Okay, that was one. This was another one where we closed above R2 and it acted as a support. Okay, the rationale behind this is that this is an arbitrary resistance line. Okay, or roughly around 2 standard deviations away from our pivot, which means that if prices goes above this and we continue to climb higher, it means that the buyers are willing and able to buy at a higher price, at a premium price. And therefore, if price does in fact come back down into this area, when given a higher price, we will not expect any sellers to be selling in this area here. Okay. Again, once we see prices going up above the premium zone, right, sellers have the opportunity to sell at any price above this, right? If prices were to come back down into this area, this is usually where the sellers would take profit, and you will not see more sellers coming into the market at these levels here. Okay, and that is the rationale behind why R2 and 4 will act as some sort of support once prices breaks above R2. Okay, so the good thing about pivot points is that it is fractal in nature, so you can see that this is the analysis for the monthly. We can actually do the same analysis for the weekly as well as the daily. Okay, so if you go down to the 4 hours, okay, all of these zones here are on the monthly time frame, but you can see that there are new zones created from for the weekly, right? So one thing that you want to take note when you're looking at the weekly, so when you're on the 4 hours candlestick, right, the pivot points will, this particular indicator, Wayne's pivot, will automatically change it to the weekly. There is a very tiny wording here called weekly pivot here. You can change the how far it is by changing one of this, right? So you can change line 330 to 334 where you want this weekly pivot to be. But when you are in the weekly, you can see a new set of levels specific for this week. So again, this was the monthly buy. A buy target means this will be where, if you were in a position at the start of the month, this is where you want to take profit. So we are in a take profit zone, but prices are continuing in the upward trend. Okay, so we have a new target here for the week. And same thing applies for the weekly analysis. Okay, pivot M2, this is where we'll be looking to enter right at the start of the week. One key thing we will note is that prices will always start between M3 and M2. Okay, you can see that the prices should always start between M3 and M2 based on the calculations. Okay. And so once we break above this box, the M3 and M2 box, okay, M3 will be kind of the support that we'll be looking to enter. Okay, so you can remove this monthly buy target. Okay, so as and when we hit this target, this is where you exit. Right now, anything above this level, we are all looking to scalp into the weekly buy target. Okay, so this you can remove because this was the monthly entry. Okay, and we are roughly about a week into the last week into March, so you can remove that. And so your analysis comes down to the low time frame. And once we get into this, we have the zones highlighted, right? And we are looking for that final push into this area here for that weekly buy target. Okay, so the good thing, again, back down to the 1 hour, okay? And your pivot points will automatically adjust to the daily time frame, okay? So this is really nice because then your daily target, you can see that it overlaps with our weekly target. So this potentially can be our daily buy target as well. You can see that the daily buy target coincides with our weekly buy target. So this potentially is a strong take profit zone. So if you're in a position sometime today and prices do in fact get up into this level, this is where you'll be looking to take profit. Okay, so right now we are looking for buys. We are looking for two things. One is where prices will end up, and we'll consider it to be a failure of a buy structure. Okay, so this was the last time. This was on Tuesday, and prices broke above R2. So this is going to be a strong support for us. Okay, and if you want to look at price action and why this is going to be a strong support, we can walk through the price action. So this was the previous high. And this was a relief sell. I think, okay, so this level here was the high for roughly about 2 weeks or 3 weeks. And you can see a lot of cells coming in at this level, which caused them to be liquidated, right? So this was a liquidation event. It came into this area, a last push up. So this level here is where the sellers got stopped out and it came back down again. So the next time around, when it came back up to this level here, sellers will looking to double down, hoping to bring prices back down into this level, right? So once we break past this high, okay, this move to the upside before a downward candle. This is probably all due to liquidations. Okay, new sellers came in, and then they were liquidated again. So if prices do in fact come back down to this area, you will not see sellers below this level here. Okay, so what you want to do is you want to look at the volume from this area to this area. And the tool that we usually use is the volume profile. So if you go down, you go on to the left side navigation bar, you can see 1, 2, 3, 4, 5. What you want to see the fixed range volume profile. And what this allows you to do is it allows you to select two key points and give you the idea of where the majority of the trades were. Okay, so you can see a lot of transactions happening here. We are not interested in this because this is where both sides of the market were looking to gain control of direction. So what we want to do is we want to look at the last candle. Okay, we're going to look at the last candle that created that basically got out of this range and it moved up, and it's exactly at the point where the FOMC announcement was, right? And prices, buyers push this up to this high here. Now, what we'll be interested in is pivot M2 using our pivot points. But what we are more interested in is this key level here. Okay, the starting point in which the buyers came in to push the price up. Okay, so this again is pivot M2. I'm just going to remove this pivot point and I'm going to change this to 20. Okay, because it's blocking the view. But I want to show you guys. Okay, some of you who are familiar with a fair value gap, you can see this was caused by the gap, right? So what's most interesting is that was this gap created by low volume? Okay, there is volume here, so there were sellers coming in. Okay, not so essentially what we want to see is that we want to see very low volume creating this high. And so if it dips into this area, it will immediately be pushed up, okay? But we can see significant volume in this area. So our best bet would be this area here being a strong support, which sits below the fair value gap. Okay, the next thing you want to do is you want to look at this green line here. Let me just highlight this in yellow. Okay, we will not trade without volume. Okay, so what we want to see is we want to see this yellow line, which is the developing POC, and the POC represents the point of control. So basically what it tells us is that from this time to this time, the majority of the volume was concentrated around this area here. And then when it gets up to this level here, you get more transactions happening at this level, and it has been the case since then, right? There were transactions above, but the majority of the transactions were happening around this level here. So essentially what we want to do is we want price to go down into that support, okay? And for the POC to be moving downwards into that support as well. Okay, so what this means is that anyone who was selling here, okay, for us to have this POC come down back to this level of support, we want the sellers to be getting out of the market, right? They have to be either closing their positions, right, and buyers absorbing that sell, right? If sellers sellers are trying to find new sellers in this area, there are only one group of sellers that will take on that position. Right, so we need two things to happen. We need the developing POC to come down, and the second thing is we need to see a liquidation event of the buyers for this group of sellers to get out. Okay, when we are in a downward move at the maximum point of a range, there's only one group of sellers who are willing to take on these orders. Okay, and this group of sellers are usually the buyers with their stop losses. Okay, so no sellers with volume will be selling at this level, right, to take on the positions that were sold off earlier. So you'll expect the biggest group of sellers, right, to be all of the buyers with their stop losses below. So right now we do not know where the majority of the stop losses are, okay? But once it gets down into this area, what we want to see is we want to see a triggering of the stop losses before it bounce back up, okay? And then as it makes that high, okay, we might get another sweep before we move up higher, okay? Again, the target is, this is the daily buy target, okay? So essentially for us to actually get into the position, we need to see two things. We need to see sufficient volume coming down into this area, which means that sellers are willing to let go of their positions, be it via trailing stop losses or them closing off that position. Then, and they will most probably be passing on those positions to early buyers who have their stop losses below. Once that happens, right, we may or may not see a sweep, right? So, but this is going to be a low that you know that prices will not fall further. Okay, and as it gets back up, we want to be entering in this position here, coincides with our FOMC news announcement bias, and potentially the target will be this area here. Okay, this is the daily buy target, coincides with our weekly buy target. So two things can happen. We can actually hit the daily target today, or if we end up in a range, that means we create a low and we end the day in the middle. Okay, tomorrow's R2M4 will be in this level, at this level again, and that's where we find another setup to aim for the weekly buy target. Oh, this yellow line was drawn by me, so do not be confused with this yellow line, right? The POC, developing POC line will be drawn up to the most recent candle, but you can see that all of these are all low volume right now. So if you are coming in to buy right now, you're absorbing the sells, right? People are still selling in this at this level. So we will not want to be buying until we see either sellers getting out or new buyers coming in. Do an analysis for this morning. Okay. You can do this. So one other tool that we commonly use is the periodic volume profile. Okay, you can search for PVP, periodic volume profile. So instead of you defining the date range, the PVP allows you to define based on either a bar, a minute, hour, day, week, or month. Okay. Most commonly you'll use the daily tool. Okay. Same thing, what you want to do is you want to add the developing POC. I'm going to highlight this in yellow. Okay, and then we go down to the lower time frame, and you can see why today was a sell in the morning. Okay, so it made that high, it broke down, and you can see the majority of the sellers are here. Okay, so as it got up into this area, see the POC still remains at the bottom, so buyers were still strong here, right? And we were looking for a buy if this pushes up higher, but it immediately gets back down into this level here, which was the start of the buy. And we do not even need to look at this level here. We'll be looking at this level here because a majority of the sellers got in at this level here. So as it gets back up into this area, we couldn't even get to that high, but you can see that this area here, as it did not create that higher high, if this rejects, we are going to sell, okay? And then the POC comes back down into this area. So a lot of people will be looking to buy at this level, but because this is not at the absolute bottom, and if you look at the hourly, same thing, you just need more to have a confluence of volume and price. Okay, buyers came in here, did not create a higher high, means that this group of buyers are weak. They did not get any more buyers. Sellers continue to sell. And when it comes back down to this baseline, okay, you know that the price is not going to get back up into this level. Okay, so if you put the hourly PVP up, okay, ideally, where's the area of support? You want to see something like this, a profile like this. Okay, you want to see a volume profile where the majority of volume is at the hourly low. Okay, so right now you can see the highest volume is at this level here. So you aren't seeing sufficient sellers getting out yet. So we are not looking to buy at this point, even though we have already entered into this area, this fair value gap here. Okay, the fair value gap has to coincide with some sort of volume indication. If it's not going to give you a volume indication, then it's very hard for us to be looking for a buy. Okay, so right now, the only volume that we should take note of is the 3032 level. Okay, it's backed by the volume, and it's also sitting inside the pivot M2 level. Yeah, it's getting a little confusing. Okay. Okay, so if we see a strong move to the upside, so this is a guide. If we see a strong move, okay, you don't have to worry, just need to look at this entire move to the upside. We're going to find the highest volume in that hour's candle. and we want the price to come back down before pushing up. Okay. So this was the expected buy. Okay, we look at what happened this morning, Singapore time. Okay, this was the push to the upside, created that higher high, but this is considered a weak breakout, right, or fake out, right? And as price comes down, this is where we're looking to buy. Okay. As and when you see a break below, right, this was the candle where buyers came in. As and when it breaks below, if it breaks below this low, this is where you're going to put your stops. But there's a chance that it will look at this level of resistance, okay, because all of the buyers' orders were absorbed, but sellers continue to sell down. So you can see that as price comes back down up into this area, you're going to find more and more resistance or lesser and lesser buying power to push price up higher. Once we find the area in which sellers are not willing to offer at a higher price, right? They're taking all the bids up in this area. And as it comes down, okay, you want to look at the highest volume area. Anything above this high, okay, you will not be able to see any buyers here because sellers were the ones who were hitting the bids, right? If they were to offer higher, they might not get the sales, right? They were very aggressive in this position here. So as it comes down, right, more buyers came in. So this low is going to be is going to create a breakout if it cuts down. Okay, because all of the buyers were absorbing all these sell orders. Second round, sellers came in, sell off, and this became the highest volume area. So before it's sold off. Okay, so you can see as absorption here as well. So whenever an absorption happens, okay, if this does not create a higher high, okay, you're gonna have the same thing again. It will hit this level of resistance and it will come down here before it breaks down. Okay, the sellers came in here. Sellers were selling here, selling here, selling here, selling here. So this is the resistance line that we're looking at. And once you break, you have to look at this line here. You have to look at this line here. So there are very limited upside potential here. There's greater potential, and we're looking for a liquidation event. Okay, so right now none of these are liquidation events. Liquidation events will be something like you create a big move to the downside and it immediately pushes back up into the level where it started off. And an example of a liquidation event. Probably this. Right? A lot of buyers, and then it dips and immediately reprices. So a lot of buyers were building up positions here, building up positions here. Sellers triggered that off, and then the buyers double down and pushes the price up. Okay, so today we kind of talked about the pivot points. We talked about two other key volume indicators, volume profile, fixed volume profile, as well as the periodic volume profile. Right, cool. So pretty standard. We talk about this on every session. So it's good to have a few of these sessions where we kind of explain um, what each of these lines means, so that when we do the live analysis, we can cover a little bit more on the different instruments. Yeah, but so key thing, I think that a lot of people are looking at just price and time, and we usually see volume as a secondary attribute, but essentially that's the most important one, because uh, volume with huge price means that's the direction that you want to take. Volume without uh, large price action uh, means a lot of absorption, a lot of accumulation and distribution, and you have huge price action without volume. Just mean very thin book, and those areas usually do not hold as a support or resistance. Okay, I can give you an example. So say for example this, you expect very low volume in this areas here. Okay, so something like this. You can see this entire area here is made of very low volume. So basically there were all of the sellers were sitting at these levels here, were sitting at these levels here. And as it goes up, there weren't any sellers. The only group of sellers that came in were at this level here. Okay, so you wouldn't expect price to go below this area here. Okay, as a trading, you wouldn't be expecting the price to dip into this level, because there were no sellers in there at the first place, right? The sellers were already selling up in this area. No sellers are going to push the price down lower at this level. But it's different for this because, right, you can see sellers trying to sell at this high, and then a whole bunch of sellers. That's why you can close it up pretty quickly. Okay. Yep. Cool. Yep. I think we are at time. So hopefully this was useful for you guys. If you have any questions, feel free to email me, Sherman, at this email here, support@vantagemarkets.com. And any past webinars can be found at vantagemarkets.com/webinars. Okay, I'm gonna leave this here for those of you who wants to sign up. I'll leave this QR code here, so you can scan this QR code and um, be able to get your first deposit bonus. Okay, I'll hang around for any other questions. If not, this will be the end of today's webinar, and I'll see you guys again tomorrow.